Morning, good afternoon, good evening, depending where you're located. Thank you for joining us. We are pleased to welcome you to this webinar, which is organized in collaboration with the Prince's Accounting for Sustainability project, also known as A4S. My name is Brigitte Raffegeau. I'm lead on the network content at the IIRC. In a world of resource scarcity, changing employment pattern, social polarization, and distrust of business, it is no longer sufficient to assess an organization's performance based solely on its financial results. Social and human capital makes a fundamental contribution to the performance of an organization. During this webinar, we will look at social and human capital accounting and will introduce practical concepts, tools, and examples to help organizations to integrate it into business decision-making, to enhance business performance, and increase social outcome delivered with the A4S Essential Guide on Social and Human Capital Accounting and a case study. This guide is one of a series of guides published by A4S CFO Leadership Network to help organizations embed social and environmental consideration into their strategy, culture, and processes. In other words, this guide supports the adoption of integrated thinking and management. These guides are designed to inspire the financial community to action by providing practical guidance, knowledge, and case studies. However, they will also be of interest to others seeking to understand current approach for integrating sustainability into financial practice and decision-making. Each guide is supported by case studies from A4S CFO Leadership Network members, which demonstrate practical application of the approaches and techniques set out in the guides. Currently, there are 8 guides available, which you can... Sorry, could you mute yourself, please?
Then it would have been slightly different.
Thank you. Currently, there are 8 guides available, which you can find on the A4S website. Next slide, please. Hello? Katrina?
Hello there, Brigitte.
Yes, it seems there's a technical issue with the slides.
Okay.
I cannot see them.
Just 1 second. My apologies there.
Thank you. Sorry for this technical issue. I will introduce this webinar and lead the Q&A session, which will take place during the last part of the webinar. To explore how social and human capital can be integrated into decision-making in ways that develop resilient and sustainable business model, we have today the pleasure to have 2 speakers who will share with us their insight, their idea, and the lesson learned. Our first speaker will be Hélène Slinger, Executive Director at A4S. Hélène will present an overview of the A4S practical guide to demonstrate how accounting for social and human capital can enhance business decision-making and drive long-term commercial and societal value. Our second speaker is Karen Higgins, Executive Vice President, Finance and Chief Finance Officer at the Cooperator Group. The Cooperator Group Limited is a leading Canadian multi-line service and financial services cooperative with 41.7 billion in assets under management. Karen will present to us on how they accounted for mental health of their people within this group. Next slide, please. The 2 presentations will be followed by a Q&A session. I would like to emphasize it's an interactive discussion. On the right-hand side of your screen, you will find a box that you could use to ask a question or make comment during the presentation. You can either share your comment or question with everyone or send it through the chat function. Could you please mute yourself? Hello. Sorry, everybody can mute? To be able to hear correctly our speakers, we are asking you to please put your computer or your phone on mute at all time, unless you want to ask a question, obviously, during the Q&A session. This webinar is recorded. The recording will be made available on the website of the IIRC and of A4S. Without further ado, I'll give the floor to Helen Slinger, Executive Director at A4S.
Thanks, Brigitte, and good morning, good afternoon and good evening to everyone, depending on where you are in the world. Can I start with an apology in that we're suffering a very heavy rain shower in London this afternoon, and I hope that you can't hear the noise from the window above me. I'm Helen Slinger, and I'm Executive Director at the Printers Accounting for Sustainability project. And at A4S, we work across the finance and accounting community with the objective of making sustainable business as usual. I have about 15 or 20 minutes to give you a flavour of the materials we've developed in this area. But before I do that, as is customary on A4S webinars, I'd like to get a sense of the people on the call, if I may. So if I could direct you to the chat function on the right-hand side of the screen, I'd like you to indicate if you are a finance or a sustainability professional, or indeed if you're from another discipline. So if you're an accountant, other finance professional, or work within a finance team of your organisation, please just type finance. Similarly, if you work in the area of sustainability or corporate responsibility, please type sustainability. And also, if you have a different role to either of those, if you wouldn't mind typing the area in which you work, strategy, risk, whatever that may be, into that comments box. And while those type responses are coming through, I'll make a start. That's really helpful. I can see those coming through. Thank you. Next slide, please. Thank you. So why did we develop this guide? So social and human capital obviously make a fundamental contribution to the performance of organisations and can be significantly enhanced or damaged by this activity. Issues such as inequality in the workplace, stress, changing productivity, unemployment, homelessness, or community attitude to business have an effect on the success of organisations in the long term, especially with regard to employee engagement and the trust we engender in the community around us. As capitals go, though, they are less well understood than some of the others, particularly financial capital. This is partly because people and societal-based outcomes are inherently more difficult to track consistently, and in some cases can be controversial to assess in financial terms. That's why we developed the A4S Essential Guide to Social and Human Capital Accounting. It's based on the work of our CFO Leadership Network and their experiences of developing and implementing social and human capital accounting, and it cuts across a range of sectors. It's been developed by finance teams for finance teams, but is also useful for people in other disciplines. The guide isn't a methodology or a protocol or a reporting framework. It's been designed to support organisational decision making. This is consistent with all of our essential guides, and its purpose is not to come up with new processes or systems, but to help integrate long-term and broader sustainability considerations into existing ways of working wherever possible. It's worth noting, though, for those of you who may be familiar with the Social and Human Capital Protocol, this guide predates the protocol, and indeed some of the concepts we introduced within it were used and built on in development of that protocol. Next slide, please. Thank you. So what is social and human capital? Now I see we have a number of people joining by phone today, so you can't see these slides. So I'll just read out these quick definitions. So human capital, the knowledge, skills and attributes of the workforce and others across the value chain. And social capital, defined as value added to society by the organisation's products, services and activities, as well as the relationships within and in between communities, groups of stakeholders and other networks. Now, these definitions aren't definitive. They're developed by our members who worked on this guide, based on their experiences, although they did draw on definitions developed at that time by the IIRC, by the World Business Council for Sustainable Development and the World Bank. From these definitions, you'll see that social and human capital is integral to every organisation, regardless of sector, and it should be considered in every business decision, and accounting for it can help you understand how to incorporate it into your day-to-day decision making. Next slide, please. And to add a bit of colour to these definitions, the guide includes a number of examples of what could generally be considered to fit within these definitions. On the social capital side, these range from license to operate type factors such as trust, reputation and community relations, over to an organisation's response to an impact on social trends such as obesity and inequality. And on the human capital side, they look across ethical, legal and responsible business factors such as human rights, working conditions and the strength and resilience of the workforce. Now, as an accountant, I personally find it useful when I think of social and human capital to focus on the word capital. By that, I mean that capital is something that you invest in, and in doing so, you can expect a return from that investment in the same way as you would financial capital. But if you don't invest in it, there's the potential for the value of that capital to erode. So by investing in social and human capital, in trust, in reduction of inequality or human rights, you can expect a return that is of value to the organisation. But conversely, by ignoring these factors, the value of the capital may erode, leading to reduced returns for the organisation. The guide also introduces the concept of impacts and dependencies. Impacts on social and human capital can be described as the extent to which an organisation's actions or decisions contribute positively or negatively to a persistent change in the well-being of people. They can either be people living in wider society for that social capital piece, or people employed by the organisation or its supply chain for the human capital side. Positive impacts are obviously a benefit to society, and negative impacts impose a cost on society. On the dependencies, a social capital, these include, for example, where an organisation depends on customer relationships and trust or resources that local communities also use. They're therefore dependent on good relationships with these communities. For example, these might be Indigenous communities. And dependency on human capital includes dependency on a healthy and skilled workforce. Next slide, please. So why would my organisation or your organisation want to account for social and human capital? Just looking at the business case here, the business case can vary significantly across each organisation, excuse me, as to why they would want to account for social and human capital. However, all organisations are having to address issues they could previously ignore, as shown by some of the statistics highlighted on this page. So increased consumer power, changing ways of working, or mistrust of business. However, the traditional ways of capturing and tracking and reporting business performance focuses mainly on financial and operational measures and do not allow organisations to be proactive in managing the new social and human capital opportunities and risks they are both facing now and in the future. If you could just give me one more click, please. Thank you. So key benefits. The organisations from our network that helped to develop this guide identified these 5 key benefits in accounting for social and human capital. So these include reputational issues, managing risks, strengthening license to operate, reducing costs, and identifying new markets and opportunities. Next slide, please. So the guide includes a number of tips to help get you started, or even to enhance what you're already doing if you've made a start. So, for example, a good way to start is by reflecting on your organisation's purpose and your strategic objectives, and identifying where these depend on or impact social and human capital. To what extent are these important capitals already incorporated into your decision making, and what information relating to these capitals would be useful to enhance both business and societal outcomes. The aim really should be to integrate social and human capital information into existing systems and decision-making processes rather than create anything new. And it also suggests keeping it simple at the outset. Of course, once those capitals are better understood within the organisation, you can refine the metrics that you have and use them in a more sophisticated way. Next slide, please. Another useful analysis to do early on is to assess where your organisation currently stands in terms of its maturity in this space. So for those of you who can see the screen, you can see here a maturity map that we have developed to help you with this. It can be useful to identify where you currently are across 4 key areas. So integration into your decision making, the scope of what you consider within your analysis, how you measure and value social and human capital, and the extent to which you evaluate performance of the capitals and whether you base this on inputs, on outputs, outcomes, or impacts. You can then use this maturity map to identify what level of maturity you want to achieve and how you can go about getting there. Next slide, please. The guide then leads you through excuse me, some key questions to answer in relation to the scope, the measurement and the evaluation of social and human capital, and provides guidance to help you answer these questions. The scope stage helps you to determine what will be included and what will be excluded from your assessment and covers 3 main areas: the boundaries, materiality and completeness. The measure and value stage considers different options you have when measuring and value your social and human capital, and the evaluate and apply stage gives guidance on how you can evaluate the information you've collated and apply these within your decision-making processes. Next slide, please. The guide provides a range of examples of social and human capital accounting from our CFO Leadership Network organisations, and the case studies have been presented to show the different approaches that they are currently using. They're categorised within the guide across those 4 areas that I mentioned earlier: inputs, outputs, outcomes, or impacts, and this shows that the ultimate aim does not need to be about capturing impact, but is dependent upon the type of information needed to influence the business decisions being made. Next slide, please. So finally, I just wanted to touch on some of the resources of ours that may help you. We've worked with some members of the Canadian chapter of the A4S CFO Leadership Network to show how they've implemented social and human capital accounting within their organisations. You can find these worked examples on our website. Just to touch on them very briefly, one is developed by Brookfield Asset Management, which was a project as a first step they took in creating a better understanding of their human capital. The Cooperators group, so this is a worked example that outlines their mental health initiative, highlighting the issues that they faced and the trigger for action. And of course, we're going to hear from Karen, their CFO, on this in a few moments. And finally, we have one from Manulife, which is an example that sets out their methodology to quantify the benefits to their staff of their investment in technology training. So as worked examples, these provide much more detail than the practical examples within the guide itself, and they are additional resources available outside the guide. And the next slide, please. So as I mentioned earlier, our social and human and capital accounting guide predates the social and human capital protocol, but the good news is obviously now that's been developed, there's lots more additional content, definitions and guidance that will help you in your social and human capital accounting journey. Excuse me. As part of the protocol's technical committee, we worked alongside a number of other organisations to support its development, and the protocol builds on many of the concepts and contents within our guide to develop the Social and Human Capital Coalition's objective of a credible, comparable and broadly accepted approach to social and human capital impact measurement and valuation. Next slide, please. I mean, that's everything that I wanted to cover now. So many thanks for your attention. Apologies, I've lost my voice a couple of times, but hopefully you've been able to hear me. I understand there will be time for questions at the end, so I will hand back to Brigitte. Thank you.
Thank you very much, Helen. So now we'll have the case study with Karen Higgins, Executive Vice President Finance and Chief Financial Officer of the Cooperator Group. Karen.
Thank you, Brigitte, and thank you, Helen, for that introduction. And good morning, good afternoon, and good evening to all the participants on the webinar. It's a real treat for me to be here to present our worked example. Next slide, please. This just gives you a quick outline of the things that I'm going to cover over the next 15 minutes or so. I want to tell you a little bit about who we are as an organization, and I'll spend most of my time talking about our mental health initiative, the whys and the hows, the outcomes and the conclusions that we went through as we put this worked example together. Next slide, please. So who are the Cooperators? This is an international audience today, so I wanted to share with you that we are a leading Canadian multi-line insurance and financial services cooperative. We are based solely in Canada and are owned by 46 member organizations across our country. We provide solutions for property and casualty and life insurance, institutional asset management, and brokerage operations. And we are really at the heart of our organization, a purpose-driven company. We have an explicit goal of providing security for Canadians and Canadian communities. And what we like to say is that we exist to create profits for people. It's really a fundamental part of who we are as an organization. And we're entrusted with approximately 42 billion in assets under management. In Canada, we are the #4 property and casualty insurer and the #10 life insurer. And I'm proud to say personally that I'm a proud member of the Canadian chapter of A4S, which you've just heard about from Helen, that's supported by a number of my colleagues across the country in similar capacities with the support of CPA Canada. Next slide, please. So I want to spend the next couple slides talking about our mental health initiative, just to give you the context for what this was all about and how we then worked with this initiative and with the guide that Helen's just described to really align the two pieces of work. So our mental health initiative was launched in 2016. And at the heart of the initiative, we wanted to champion proactive approaches that really created and sustained healthy outcomes for mental health for both our employees as well as our clients. As I described earlier, we are a life insurer in addition to some of the other financial services that we have. And as part of our life insurance business, we are a group benefits provider, providing group benefits products and services to a number of client companies. Our unifying goal was to employ best practices, look for effective partnerships, and innovative product and services to promote a mentally healthy workplace, all with the goal to make the workplace a pathway to positive mental health. It was really the core of what we wanted to accomplish. Next slide, please. This slide contains a lot of words, but again, this is really the core commitments that we wanted to have come to life in our mental health initiative. And while I won't go through all of these for the audience, there were a couple of things that I did want to highlight. The very first one being a fact that we wanted to be very conscious and deliberate in providing holistic support to our employees and to our clients, and that we really wanted to mobilize our entire workplace to be part of the solution. We recognize that mental health issues were part of our organization, part of what our employees were facing, and we really wanted to create an environment through this initiative that would bring everyone together to be very proactive in what we wanted to accomplish. Next slide, please. So why? Why did we want to put this initiative in place? So let me provide for the audience a few facts. It's estimated that over 7 million people in Canada live with a mental health problem. 1 in 5 will experience a mental health issue directly. And for those that aren't impacted directly by a mental health issue, they will know somebody who has one. We also know that mental health issues have a significant impact on society. And so it was very important that we focus on mental health advocacy and really become a catalyst for a mentally healthy society. We often say that our workforce is our most valuable asset, and this work was really ensuring that we could walk the talk. I also highlighted earlier that we are a group benefits provider, so it was important that we create products and services that could support our group benefits clients, and that we had a business need that was driven by our own data. We also recognize that mental health is an unmet need for Canadian communities. Part of our cooperative identity and part of our mission is to ensure that we meet unmet needs across the Canadian landscape. And so this was one that we recognized was a significant gap and that we wanted to address. And we also wanted to align our expertise with having a positive social impact for our staff and our clients. And again, as I highlighted earlier, we were recognizing that we were having an increasingly higher number of medical leaves that were impacting the profitability of our own organization, as well as those organizations that we service through our group benefits program. And it was a trend that we fully expected to continue into the future. Next slide, please. So how did we go about tackling this? So it really existed in 3 tranches, as you see here on the screen. And the first tranche, which I'll dive into a little bit more on my next slide, was establishing the business case for the initiative. We recognized that this initiative was going to be a cross-company initiative. It was going to, sorry, I just had a message that said connection loss, so I'm hoping that everything is still working fine. We recognized that it would have a series of costs in place to, thank you, David, costs in place to make this initiative come to life. So it was equally important for us to establish the benefits that we're going to incur as we expended those costs. And so we really implemented this business case through a collaborative effort between finance, human resources, as well as our group benefits organization. The second tranche was to implement the initiative, and I'll have more details on that to come. And then the third tranche was reporting and monitoring, really establishing some key performance indicators and ultimately a mental health scorecard. Next slide, please. So like all good finance people, it's important that we do a full cost benefit analysis. And so as I've described to other audiences that I've spoken to about this work, the series of costs that we would incur to bring this initiative to life were pretty easy to determine. We were going to obviously engage a number of internal people. We were going to engage some information technology resources, and we were going to have some training costs through external providers. So those external costs were pretty easy to quantify. What was a little bit more challenging was the benefits. And I will speak to some of that in future slides, but we really did find that the benefits that we've listed here on the slides, they were quite difficult to quantify. We recognize that in all likelihood, we would have savings from the reduced duration of disability claims, and that we would likely have a reduced number of disability claims. But establishing those and measuring them was a bit of a challenge, as was the likely increase in productivity that would result. And so we really focused both on cost reduction as well as cost avoidance. As part of our cost benefit analysis, we also completed a full risk assessment, as we do in all of our business cases. And so we looked at risks in terms of how they could impact our how this initiative could impact our group benefits customers, how it would align with our overall strategy, what the impact would be to our organization, and then the overall perception of the initiative. So fully review of risks as it impacted this initiative. Next slide, please. So I said earlier that I'd describe a little bit of our benefits. And so the very first one was really about fulfilling that purpose that I described earlier in my presentation. We want it to be recognized as a catalyst for supporting a healthy workplace. And so we believe with successful implementation of the initiative that we would be able to do that. We were very focused on improving our staff well-being, and obviously this was impactful to our ability to enhance social capital. We wanted to proactively manage and address the emerging risk of mental health through metrics for both the business as well as human resources. And we wanted to very much address the cost of mental illness through both our program costs as well as staff productivity. And that was very fundamental to this initiative. And the last couple were around enhancing and maintaining our reputation through improved dialogue and staff engagement. And then ultimately identifying and exploring new markets and emerging opportunities as they relate to mental health. Next slide, please. So this slide highlights that we had 3 areas that we wanted to focus on from measurement, and specifically measurement against those benefits that I just described. We focused in 3 key areas: increasing productivity, avoiding absenteeism, and ultimately claims reduction. As it relates to increased productivity, we really wanted to improve presenteeism, that element where staff are at work but not really at work. We also wanted to improve employee engagement through having that focus on mental health and mental health well-being, and ultimately through understanding how mental health impacts not only those suffering from a mental health issue, but those that are impacted as well, including coworkers. And we did that through a blend of external research and the development of a productivity standard. From the avoiding absenteeism, we had 3 key benefits: the enhancement of productivity, again focusing on employee well-being, and overall expense management. And we did that through training and support as well as perception management. And then with claims reduction, we focused on reducing the incidence of mental health issues as well as shortening the duration of any specific claim. And we did that through trend analysis, looking at our own historical data, estimating what the likely impacts would be of both incident and duration, and then establishing target reductions. And ultimately, that led to the establishment of a mental health dashboard. And within the dashboard, we are now tracking the number of mental health incidences and the duration of each, as well as the number of mental health accommodations and the average number of sick days. And we align that with the establishment of a mental health index, the usage of resources, and the completion of training. Next slide, please. Now, all of this sounds like a wonderful approach, but it didn't come without a set of challenges, and I've highlighted 4 here. The first one was really the development of those key indicators that I just spoke to. And the challenge was establishing the right level to set these indicators at. What was the right level of, for example, the number of sick days that we would have, or how much shortened a duration claim would be? The second one was determining the benefits. We intuitively knew that this was the right thing to do, but it was a real challenge to actually measure the benefits, both that duration and number of claims. We anticipate it would shorten or go down, but we recognize that in the short term, we would probably have the opposite impact. We didn't always have the data available to us. We had a lot of information about our own employees and our clients, but we didn't always have the necessary information, for example, to establish appropriate productivity for both a mentally healthy employee as well as one suffering from a mental health issue. And the fourth challenge was around the perception of the strategy. We did not want the strategy to be viewed as a cost-cutting exercise. Quote, we're only doing this to reduce claims, for example. And out of these challenges, we recognized that change doesn't happen instantaneously. We needed to really develop the appropriate time frame for achieving the benefits. Next slide, please. So our key learnings and the impact. The first one was that with the work that we did, we absolutely had improved awareness and engagement of employees, awareness of what mental health issues are, how they impact employees, how they impact our coworkers. And we did that through significant amount of training, and that training really led to increased confidence on the part of employees and leaders. And that the sharing of information around mental health really does ensure that we reduce the stigma associated with it. We were recognized by external parties for the work that we did with relation to our mental health initiative. We ultimately made substantial improvements to our mental health benefits coverage within our own organization. We did a thorough review of our current benefit program, and this led us to increasing our coverage limits and ensuring that alternative therapies were approved, not just the tried and true drug therapies. And the last learning that I wanted to highlight was that we really had an improved understanding of mental health issues and the role that we play, both as leaders and coworkers. Next slide, please. So conclusions that I want to share with the group. We recognize that the mental health strategy was absolutely the right thing to do for our staff and for clients. The initiative was far better implemented because we had a joint partnership between our project resources, human resources, as well as finance. We recognize that quantifying the benefits and defining metrics was a significant challenge, one that we were ultimately able to overcome, but nevertheless was foundational to our work. And lastly, that business experts and external resources were absolutely needed in order for our initiative to be successful. So that concludes my comments. And I again thank the audience for the opportunity to share our experience utilizing our worked example. And now I'll turn it back to Brigitte for questions. Thank you.
Thank you very much, Karen. So we have actually a first question, which will be, Given the stigma associated with reporting mental illness by the individual, are you concerned that the tracking and reporting of KPIs might further accentuate people not reporting their illness?
It's a great question. We were initially concerned about that stigma that's associated with mental health was really something that we were trying to overcome through this initiative by really telling people that mental health issues are real and that they need to be brought out into the open. But we do think that it's important that that we track the incidents so that we can get a better handle on where they're coming from, what are the key sources of them, so that we can provide better solutions, potentially that we can provide better support to the individuals and really tailor, if we're talking about our own organization, what our programs are. And one key example that that I will share with you is that as part of our tracking, as I alluded to, we obviously have had more mental health issues be identified, but we also recognize that many of our employees did not want traditional drug therapies. They really wanted to find alternative therapies. And one of our learnings through this exercise was that was very real, and that led us to explore solutions with different providers on how we could address those other therapies. So while it was absolutely a risk and one that we recognize, we really feel that we've been able to address it through the work that we've done.
Thank you, Karen. Actually, we have another question for you. Do you have any data available representing the outcome benefit of your initiative?
We do. It's been an interesting exercise where we started out as a benefit, for example, of reducing the number of claims. What we found over the first year-ish of post-implementation is that we didn't reduce claims at all. In fact, we quite increased the claims. And that relates to my comments around the recognition that this stuff doesn't happen immediately, and we really did need to elongate the time. Now, over the last little while, we are seeing our own trends coming down slowly. So there's still that balance. But the other trend that we are seeing is that more and more people are utilizing alternate therapies to address their issues rather than utilizing sort of standard drug therapies.
So they are very interested by your KPIs and how you measured. Could you please expand on the productivity standards which you developed to measure the benefit associated with increased productivity?
Oops, sorry. Certainly. That was one. The productivity standard was one that we were challenged with in terms of developing. And what we did was we utilized external support for that, where we did a number of research exercises. And what we did was we established a sort of estimate that 80% of a workday was deemed to be an appropriate estimate for productivity for a healthy employee. And through that research, recognized that about 42.5% of a workday was an estimate for productivity for an employee with mental health issues. And that really created that baseline for us so that we could assess the benefit by looking at the differential between those two measures and using the productivity of a healthy employee as a denominator. We really found that we did not have the internal data to establish that particular measure. without going external to get the information.
Thank you. Still for Karen, how did you incorporate these KPIs into your internal, referring to mental health, in your internal management information, and what influence has this had on your decision making of CapEx and other and resource allocation?
We have incorporated into our planning process, so it forms part of the work that is done within our human resources team, and is part of our KPIs in our planning process. So we track both incidence and duration. But equally important, we track the number of instances of things like training. So we had a KPI established for all of our leaders to complete mental health training, which we were able to successfully accomplish. And that was an important driver to achieving our overall goals for the initiative. The other key pieces that we have tracked is the usage of our intranet resources on mental health. So how many people are accessing that information, because that has become a supplement to the training program that's existed. And so all of those form measurements that our HR team utilizes as part of their annual planning cycle. As well, within our group benefits areas, they've used the information to work with their clients, so now our external clients, with helping our external clients develop their own programs, their own benefits programs with relation to mental health. So utilizing some of the information that we've gleaned, obviously with appropriate confidentiality around that, to help our clients with their programs.
Now we have a question for Ellen and Karen. What wisdom would you offer to others that are thinking of embarking on a similar initiative?
Shall I take that first, Karen, give you a break?
Sure. Let me drink some water.
Yeah. So I think my advice, I mean, I touched on the top tips that are in our guide for getting started, but really just to expand on those, it's about understanding where the material areas are in your organisation where you either impact on social and human capital or you depend on social and human capital, because those are the areas where actually by changing the way you do things, by understanding those capitals more, you can really start to make a difference. I guess that's my headline comment. Karen, I don't know if you want to add to that.
Yeah, I'd say to anyone on the call, that, as I said earlier in my presentation, you know, our people are the most important resource that we have, and I'm certain it's true for all of your organizations. And while this is one aspect of our commitment to our employee group, it's been a very important one, and one that's addressing a societal trend that exists. So if you're a finance person utilizing this guide in whatever capacity makes sense for your organization, is a really worthwhile exercise to really assess the value of our human capital. We don't often do it as finance people. We maybe give lip service to it, and this guide is really important to attaching that value that we do get from our employee base.
Thank you to you both. I have a question for Helen. You've mentioned inputs, outputs, outcome, and impacts. What do you mean by this term, and how are they relevant to social and human capital?
Okay, so the best way of describing these is that they're different ways of measuring changes in social and human capital. So inputs would be the resources that you put into a specific initiative, for example. So that might be the amount that you have invested in something. So let's say that's a program to get unemployed people back into work. Then the outputs would be the number of people that benefited from that program. So maybe 100 people were involved in the program. The outcomes are then the things that changed on account of that initiative. So perhaps 20 people are now in work that wouldn't have otherwise have been. And the impact essentially is the so what, measurement of the so what. So this might relate to measurement or potentially evaluation of their enhanced well-being or of their standard of living from having a job. But you know, these are not necessarily that straightforward to measure. And as you work sort of along that line of, you know, input, outputs, outcomes, and impacts, you're increasing in complexity in terms of how you measure those aspects. And particularly with outcomes and impacts, you know, you need to be very much aware of other factors that feed into those outcomes and impacts, because arguably you can't claim that all those changes were on account of something that you did, the program that you as an organization led. So hopefully that explains it.
Thank you. Maybe a last question for Karen, unless somebody else asking a new one. How did the involvement of the finance team add value to the project and to your human capital?
Well, selfishly, I always like to say that finance controls all the power in the organization. But kidding aside, I really do believe that the value that finance brought was really the quantification exercise. As I said earlier, we intuitively knew that this initiative was the right thing to do for our employees and for our clients. But by quantifying the benefits, as difficult as that exercise was, quantifying the benefits really made it real. So we could come back to anyone and say, this makes total sense from I'll say heart perspective, but now the head says, here are the financials or the quantification that supports it. So not only was it the right thing to do from a heart perspective, it was the right thing to do from a head perspective.
Oh, thank you very much. Yes, Marta, you can make a direct comment.
Thank you very much, Brigitte. Hello, everyone. I'm Marta Santamaria from the Capitals Commission. So it's fantastic to see all the interest. I was really surprised seeing so many people in the webinar, and also the great examples that are recently emerging. So the presentation of Karen was fantastic. So thanks for explaining the connection between your guidance and the social and human capital protocol. So I would like to share with all the people interested here that the social and Human Capital Coalition now came to work with the Natural Capital Coalition. So now we are working through what we call the Capitals Coalition. We are working together. So quite recently we have been trying to work in transferring and working together these two organizations, and we are going to be more active in engaging with the community from the beginning of next year. And one of the things that was explained is the connection between your guidance and the Social and Human Capital Protocol, but also the Social and Human Capital Protocol is mirroring the Natural Capital Protocol. And this will help companies to make integrated assessments of both natural, social, and human capitals. So I think that this is also an addition that should have been mentioned. So thank you very much for the webinar and for the great presentations today.
Thank you, Marta. So I will go to next slide to finish this presentation. So thank you for all your questions. Before we draw this webinar to a close, I just want to quickly raise attention to our IR Business Network, the IIRC ever-growing community of companies worldwide. To improve their corporate reporting. Many of you online know that we have are member of the IIRC network. So there is a 2020 program which is coming up with all the activities, and you have on the slides the 2 dates for the conference that will be going on 2020. And if you need any information regarding the business network, please contact the address that you can see on the slide. I would like to thank our great speaker, Ellen Slinger, Executive Director at A4S, Karen Higgins, Executive Vice President, Chief Financial Officer at the Cooperators Group. Thank you for sharing your insight and experience. Thank you for attending this webinar. If you missed the 4 previous A4S IIRC webinars, you can have them, their recording available on the A4S and on the IIRC website. Thank you, everybody. And there will be a last webinar for 2019 on A4S IIRC on Thursday, 7th November on debt finance. Thank you very much. Have a good night.
Thanks, Brigitte. Thank you, Brigitte.
Thanks, Brigitte.